everyone. This August 3rd week, almost every day we got an important local and global macros that can potentially affect the global momentum. So we will discuss everything in detail in addition to pre-market report video for today 14th August 2023. First, let's look at what happened on Friday. Nifty opened flat, then within 5 minutes it dropped 60 points, and in the next 1 hour it dropped another 30-40 points. Then it took a support around 19,450. However, in the final half hour, it started to drop again and closed very near to the day's low. Here, closing to the day's low, it's a very important technical aspect to note since it indicates the further weakness. Anyway, we will discuss about those in detail in the technical part of the video. On Friday, the main draggers were private banks as RBI asked them to keep more money aside, making it harder for them to use that money, which could potentially affect their profit as well as above 150 crore rupees every month for every big banks. Here, I'm kind of seeing the pattern. Please pay attention. It might be very useful for future trading. On 25th January, expiry day early morning, before our market opening, Hindenburg released their report on the issue related to Adani companies. But on the expiry day, market didn't react very much to that. For example, on the day's opening, Adani Enterprise dropped 3% but recovered 2%. Then the actual carnage happened only on Friday. Similarly, now RBI announced their increased CRR in last Thursday itself. Here, because of the expiry day, market didn't fell much. Nifty dropped only 40 odd points, but the actual higher impactful drop 115 points happened only on Friday. The takeaway here is, in the negative scenario, expiry day volatility could be end up in positive for the market, so we have to adjust our position based on the negative anticipation for the upcoming Friday. Anyway, in addition to banks, pharma down near 1.5% due to the poor earnings of Biocon and Alchem Lab, whereas FMCG down 0.73% due to inflation worries. Overall, 11 out of 13 major sectors ended the day in negative and the advance second ratio was 0.75, which means over 25% number of stocks declined than that advanced. Then for the whole week, after 4 weeks of positive close and for the third consecutive week, Nifty ended in red. Last week it lost 0.45%. And one more very important, not so good news is about institution. I mean, after 2 days of minor buying, FII turned as mega sellers. They net sold for over 3,000 crore rupees and DII net bought for just 500 crore rupees. Then after our market hours, coming to US, Bureau of Labor Statistics released the July month's US wholesale inflation PPI data. On month-on-month basis, the data came as 0.3%, above the analyst forecast of 0.2%, and it was well above the June month's 0%. This higher PPI data made all 3 US major index to open significantly negative, and this in turn increases the 10-year Treasury bond yield closer to its October high 5.12%. As we know, as a thumb rule, increase in 10-year Treasury bond yield is always negative for tech stocks, especially chip stock. Nvidia dropped over 3% and all other big tech was also down except Apple, which closed flat. However, on the positive side, oil companies and core sectors supported the market. Thus, both S&P 500 and Dow Jones recovered. Then in the end, S&P 500 was flat, Dow Jones increased 0.3%, but Nasdaq still fell by 0.4%. In terms of VIX, it dropped over 6% and closed below 15 from near 16 on Thursday. In case of oil, it closed almost the same as previous day close. I mean, WTI crude oil closed 83 US dollars per barrel and Brent crude oil closed above 86.5 US dollars per barrel. Regarding Indian ADR, except HDFC Bank, all other 3 closed in line with Indian market's Friday close. In case of HDFC Bank, in Indian market it closed over 1% negative, but in US it dropped just 0.4%. About GIFT Nifty, on Saturday morning it closed at 19,479 and at present there is 30 points premium. So surprisingly, it's kind of indicating flat to positive 20 points opening. So this is what happened on US and global market on Friday and weekend. Anyway, now moving to the next topic. There are four important defining macros this week that we need to look out, and those are: first, it's India specific, consumer inflation for July month. I mean, it's supposed to release last week, but they postponed it. So we can expect the data today 5:30 p.m. Indian Standard Time. At present, the expectation is 6.4%. If it comes below 6%, then it will be huge positive. Then on Tuesday, both US and China's retail sales data is due. In addition to that, China's industrial production data is also scheduled to release. Here for China, obviously we need the good numbers, but for US, I don't know what and how to expect, since if we got good retail sales, then it will increase the inflation worries. Bad data will increase the valuation worries, since at present their market is also trading near the all-time high value. Then on Wednesday, last FOMC meeting minutes is scheduled to release. It is important since analysts will interpret some clues about the future of interest rate hike. Finally, throughout this week from Tuesday to Thursday, almost all the US retail companies from Home Depot to Walmart all releasing their earnings. Again, this earning details and future guidance will give some clues about the future US inflation. That's it. These will be the defining macros that we need to look out for in this week. Now let's move to the Indian market related info. First, on Friday evening, MOSPI, Ministry of Statistics, released the India's industrial production growth for June month. And the data came as just 3.7% against expectation of 5%, which means Indian industries were not growing as expected. Mainly, manufacturing is the one that got most affected as it increased only 3.1%. However, on the positive side, both mining and electricity posted a very good number, and it is higher than last year. Second, Deloitte, world's largest accounting firm, who was hired by Adani to audit their company related to Hindenburg issue, they now resigned from auditing Adani Group. I mean, this now kind of raising the concerns, and I personally think this is huge negative for Adani. Then third, Jefferies, American investment bank, gave the warning for their investors to be careful in Indian market, since things like oil prices going up and inflation might cause some challenges in the near future. Again, this is also not so good news for the market. As a summary, global momentum is not good. US tech stocks closed negative, but other sectors recovering. However, don't know why GIFT Nifty indicating flat to positive 20 points gap up opening, and at present even US future market opened slightly negative. However, HDFC Bank's ADR closing less negative than Indian market, so that's the only positive I can think of. Then about the things to look out: ITC, Divi's Lab, Vodafone Idea, Bajaj Healthcare, Hindustan Copper and KNR Construction are some of the major Indian companies' earnings results are scheduled to release today. And in terms of macro, during the market hours, first at 11:30 am Germany's WPI data, then in the afternoon at 12 pm India's wholesale inflation is due to release. Maybe at the same time ministry might release the consumer inflation also, but for now it is scheduled to release at 5:30 pm only. Coming to technical, last week for the first 4 sessions, Nifty was moving in the close to range 90,500 to 90,700, but then on Friday it fell below 90,500. Thus, on the daily chart, it forms a long bearish opening Marubozu candlestick pattern with a lower high and lower low formation. At present, both daily and hourly momentum indicators are indicating negative crossover. In addition, Nifty closed below 21-day exponential moving average, and also RSI indicates a bearish crossover. Basically, every technical aspect suggesting continued downside movement. So, the continuation of the selling pressure could push the Nifty down to 19,300 to 19,200 area. If it breaches that zone, then it will lead to a sharper correction towards 19,000 or even 18,850 to 18,900. However, if Nifty manages to hold above 90,300 support and crosses above 90,500, some short-term recovery could take place. Overcoming 90,650 to 90,700 could indicate a reversal, but given the current setup, this scenario seems less likely. Then in case of Bank Nifty, it forms the similar candle pattern as Nifty. In addition, Bank Nifty is trading below the 50-day simple moving average, holding a lower top formation and has broken the crucial support at 44,400 to 44,500, indicating strong bearish sentiment than Nifty. If you ask me personally, I think Bank Nifty is fundamentally much stronger than Nifty. Anyway, if Bank Nifty continues its downside movement, then 44,000 will be the short-term target. Breaking this level could lead to further declines towards the next significant supports at 43,700 and 43,500. Given the consecutive close below the 50-day exponential moving average and the breach of recent support, this seems to be the most probable scenario. Then for bullish scenario, we can see the fresh buying only after Bank Nifty breaking multiple resistance at 44,500, 44,700 and 45,100. Again, similar to Nifty, given the current market conditions, this scenario appears less likely. Moving on, for Nifty, as per open interest, both new and maximum nearby call option open interest is at 19,600, hence it's the resistance to break. On the other side, 19,400 got the both new and maximum put option open interest. Hence, based on the open interest analysis, 19,400 is the immediate support to look out for. Similarly, for Bank Nifty, 44,500 maximum new call option addition. Hence, 44,500 is the resistance to break. And for now, 44,000 got the overall options open interest. So, 44,000 might act as the immediate support. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so it will help me beat the YouTube algorithm and will also motivate me to do more. Please don't make any investigation based on this, as I'm not a SEBI registered advisor. I'm doing this for my and viewers' educational purpose only. Thanks for watching.